More merger activity on Wall Street this morning. Abbott Labs announcing it will acquire St. Jude Medical in a cash and stock deal valued at $25 billion. Drug maker AbbVie acquiring a private oncology company in another deal, $5.8 billion deal there. My next guest says we will see more activity over the next year. Joining us right now is Rich Jeanneret, EY America's Vice Chairman of Transaction Advisory Services. Rich, good to see you.
Good morning.
Thanks so much for joining us. So you're seeing deal making continue. That's where we left off in 2015, the healthcare space. Is that the area you think is going to continue to see deals, and what's behind this?
I think healthcare has some room to go. I think the whole Internet of Things, the convergence of technology, the convergence around the patient, companies, particularly in the drug industry, running out of pipeline R&D being expensive. There should continue to be a significant activity between life sciences, healthcare, pharma companies. I think the bigger story, though, is I think this M&A market today has a lot of room to grow. The first quarter, a lot of people are saying, well, it's off compared to the prior year. But if you contextualize it against the last 5 years, a very strong first quarter start compared to every other year except for last year. Still 7 deals over $10 billion this first quarter. That trumps any first quarter going back to 2012. Slightly off from the prior year's first quarter. But it's like the Golden State Warriors winning 73 games this year. Would we have been disappointed if they only won 69 or 70?
Right,
Still very strong in context of the prior few years.
But what is the reason for it, do you think? I mean, we talked the last time you were on about, we're seeing this slow growth story. So when you don't have a lot of growth, you just acquire growth. Is that really what's behind this?
Absolutely. The growth story actually plays well to M&A. There's a massive amount of capital still out there. The debt market's starting to recover this first quarter. I mean, think about the disruption in the debt market sort of the last couple of months of 15 into the first quarter. They're starting to turn around. That had an impact on deal making the last 3 or 4 months. That's starting to improve. So I think slow growth, massive amounts of capital, next to zero cost of borrowing. And at the end of the day, there are other factors continuing to impact positively M&A. The strong dollar makes it easy for U.S. companies to buy overseas. Activism continues to increase, so expect deal-induced activism kinds of activity. And the Chinese being in this market, that's a new phenomenon.
What about the Japanese, though, with borrowing rates so low in Japanese companies buying in the U.S.?
Yeah, there's no growth in Japan at all. I mean, their population's contracting. Their economic opportunities are not good at home. So they have a tremendous amount of capital as well, and strong companies that need to stay competitive globally. So, look, I think geopolitical and cross-border activity will be a driver of M&A over the next couple of years. So I think it's going to be strong because of growth, and the stock market has rewarded M&A activity. The last 3 years, the acquirers' share price trades up on the day of an acquisition.
And the acquiree, yeah.
And of course, the acquiree. Yeah. But companies have gotten very good at driving synergy in transactions, so they make these deals accretive for the shareholders. And what else are they going to do with this excess capital?
Right, they have to do something with the money. Yeah.
Rich, you made a very important point, I think. We tend to focus so much on the equity markets, but the bond markets were in real disarray earlier this year. We've seen credit spreads tighten an awful lot in the last 6 to 8 weeks. How much of a driver do you think that is of this pickup in deals? And do you think that because the bond market is now so much healthier, that can drive the stock market higher through this M&A activity?
Yeah, I think that is a big reason that M&A slowed a little bit in the last 4 or 5 months. So you see it particularly in private equity-backed transactions where the leverage markets went away from. We're seeing money come back in the leverage loan. We're seeing an improvement in high yield. And I think we've seen a settling of the equity market's volatility over the last 4 or 5 months. I mean, the market's back to 18,000. Who would have thought that would have happened? But it had been gyrating for the 4 or 5 months before that. That introduces a level of uncertainty that makes CEOs a bit cautious. So I think stability in the equity markets, return to high yield and tightening of spreads, that brings confidence back, which is a critical component to deal making.
With 3 quarters of earnings being down, how does that affect this?
Look, lower earnings, I think, are a reflection of lower top-line growth. And when lower top-line growth gets harder with a slowing global economy, when you have this massive amount of capital sitting idle, I think that plays into the M&A boom and allows it to keep running, particularly given how positively shareholders and equity markets have reacted to M&A. over the last 3 years.
Yeah, this deal is particularly in medical devices, which has been exempt from some of the scrutiny that the pharmaceutical mergers have been under. Do you think medical devices are going to be more where the consolidation happens in healthcare, or do you see it branching out beyond that?
And one of the issues was the tax in Obamacare.
I was just about to say, I think that helped the medical device industry. It's the strongest part of the healthcare sort of life sciences M&A marketplace today. Look, I think the convergence of technology, the Internet of Things, us getting connected and wired to things we're experiencing an industrial revolution, I believe, in that sense right now.
I totally agree with you.
I agree with that,
And we are in the very early stages, and companies will look at alliances, joint ventures, and M&A to be a bigger player in that regard.
Yeah, really good stuff. Rich, good to see you.
Thank you.
Thanks so much. Rich Jeanneret from EY.